two traders looking at the same chart, the same candles, and one sees a setup and the other one sees a trap. Why is that? The difference can be market structure, knowing where the stock has come from before you decide where it's going. All right. Today's video, we're going to talk about market structure, what it is, how to see it, how to use it. And honestly, this is another one of those terms that just gets thrown around a lot. Okay. And it can be really confusing for new traders. It's like learning a whole new language. Okay. So market structure for trading specifically has a different definition than, say, market structure for economics. Okay. In trading, it refers to how like price organizes itself over time by forming patterns, highs and lows, peaks and valleys, okay, like a map. Okay, and you can use that map to identify trend direction, momentum, and figure out who controls the price action, buyers or sellers. Okay, so there are really only three kinds of market structure. Okay. But before we get into that, I just want to say that market structure is going to also look different based on the time frame that you're looking at it, okay? It's basically telling the story of what's happened. Market structure is the past, okay? It's based on historical price action, okay? Let me pull up. All right, I'm going to pull up a chart. I've got, I'm using the on-demand feature on Thinkorswim to time travel back to a future day so we can take a look at price action. So, all right, what's great is you can put in a day and a time and it will literally go to that day and time for that stock. Okay, so right here, I'm showing the 1 minute chart, okay? And you can see that the stock popped up and now it's in a downward trend. But if I look at it on a 5 minute chart, it's going to look different, okay? And if I look at it on the daily chart, it's going to look even more different. Okay, so it's important to understand that, and I'm a big believer in multi-time frame alignment, did a video on this, but I often, I trade on the 1 minute chart, but I like to look at the 5 minute chart because it sort of smooths out what's happening. Okay, it clears out some of the noise. All right, and that's why some people, even if they trade on a lower time frame, they'll look at the stock on a higher time frame to kind of get a better sense of what the trend is. If we look later in the day, let's hop forward to later on that day. You can see here that now there's a trend. This is on the 5 minute chart, but on the 1 minute chart, look at how much more is happening, right? But you can still see the overall trend is pretty much the same. That's not always the case, but all right. Now, upward trend structure is similar to this right here. Okay, you'll see the highs are higher and the lows are higher. Okay, this is upward trend. There's really only three trends. Okay, that's the good news. Upward, downward, and sideways. That's really it, honestly. Those are the three trends, okay? But for an upward trend, what you want to look for is higher highs and higher lows. Okay, so let me pick another one. Let's see, that's not a good one to look at. ATPC. All right, this one, I know that same day, later on, that same day, I'm going to put here. I traded this in the aftermarket. Okay, so you can see later on that same day, the high, it went up high, but the low here is higher than this low. It went up again, the highs are higher, and the lows are higher. Okay, so that gives you an upward trend. All right. Now on the downward side, okay, which you can see right here, the highs are lower and the lows are lower. Okay, so it's just kind of scaling down. All right. Now, sideways, let's see if we can find sideways. All right, this is kind of sideways, right? It's not really clearly going up or down. It's just kind of trending sideways. Okay, let me look at another one. Here, this is a great example. Here, you can see trending sideways. I mean, really, this isn't that complicated, but it's incredibly important. Okay. So this is why a lot of traders really look at the price that is the highest price of that day or high of day and the lowest price of that day or low of day. Okay, a lot of times you see like HOD, that's high of day, or LOD, low of day. Okay, because a break over the high of day, if you have a stock that's trending up, so let's say here, at this point, this was the high of day. Then you had a low, but it didn't go down past the first low, and then it popped up, and then this became the high of day. All right, now if I want to move, we can look at this on the 1 minute chart too. Okay, high of day, popped down, popped up a little, high of day again. If we look later on, an hour later, now you can see lower lows, lower lows, lower lows, lower highs and lower lows. But here in this middle section here, this middle section, it's really unclear. Okay, but if a stock breaks the high of day, that's a structural event. It signals new highs. More buyers might try to get in. Low of day, it's a break. It's a structural breakdown. Okay. So the important thing about these levels, high of day and low of day, is that they don't come from indicators. They come from the chart. And lately, I have been taking most of the indicators off my charts. I have the volume back on there, but volume bars. But I've taken most of the indicators off because they're lagging behind. And I'm focusing more on chart and market structure. This is something that I'm really, really, really working on right now. Okay, so how can you use this information for your setups? Well, it's really important to understand the overall trend. Let me try to find one here. Okay, this is a good example. ATPC. I actually traded this after market. I like trading the first hour after the market closes sometimes. And, you know, it was running up. And now it's on the backside here, right? Trending downward. Okay, but the market structure is related to your strategy. Certain strategies are going to be more effective when you have a market that's trending up versus a market that's trending down. For me, I'm a small cap momentum trader. I'm mostly trading on the front side of the move. So I'm looking for higher highs and higher lows. Okay. People that are shorting stocks are generally looking for lower highs and lower lows, a downward trend, because that signals movement in the direction that they want to trade, shorting stock. Okay, now some people actually like to trade, you know, in this middle area, bounces off support and resistance. Okay, you can see that people are clearly doing that here. All right, I guess that is a strategy. That's not my strategy, but that is a strategy. Okay, so the market structure is directly related to your strategy. And when you see that the trend, say for me, I'm a small cap momentum trader, I'm looking for an upward trend, right? But when I start to see the trend reverse, then I know that my strategy is not going to work during that particular market trend. All right. So this video, I know it sounds like an overly simplistic concept, but you hear so many traders talk about like, once I understood market structure, and yes, it sounds overly simplistic to say, well, it's either going up, down, or sideways, but it really does inform, because a lot of times you're trading and you're like, oh, it's trending up, it's trending up. And you think it's going to pull back and keep going up, but then that's the beginning of the backside. Okay, so really understanding market structure. I've been working on, last week I was really focusing on drawing trend lines and levels of support and resistance, and this is absolutely related to that. And I will definitely do more videos on that as well. So going forward, just when you're not trading, when you're sitting in front of the charts waiting for something good to come up, it really can be interesting to kind of look at the charts and try to identify the trend. Okay. And this is another way that you can use back testing, or this on-demand feature. I've started doing a little bit of back testing. I'm not like super deep into it yet, but it's really cool to be able to go back in time, look at my trades and try trading them again and see, if I've made a mistake, how I could improve on those trades. But it's also interesting to go back and look at things like market structure. Okay, because when I look back at some of my trades, I realized that there were times where I misidentified whether the trend was going up, sideways, or down. In fact, one of my viewers the other day, he identified the trend. I thought the trend was still going up, and he said, that's a sideways trend. So anyway, check out some of my other videos. I will keep making them on the weekends, explaining different concepts to help me as much as you guys, and trade smart.